The Rebel Capitalist Show.
Has anything changed in the Australian housing market other than it's just gone
Oh,
straight
just
up?
just a bit. I've said to you, I think before that the Australian economy is house and holes, right? Houses and holes. So basically, It's all about the housing sector and it's all about mining, right? Well, over the last few months with the COVID, the government threw billions and billions of dollars at the construction sector, threw billions and billions of bribes at first-time buyers, and guess what? Property prices are on the rise again, and we've already got very high property prices, very high debt, and they're throwing yet more of this on the fire. And by the way, they're also releasing some of the lending standards to make it even easier to borrow, despite the very high debt. So the government is basically betting on housing to get us out of this hole.
So what are they doing specifically? So you talked about they're lowering lending standards. And
Yep.
what else are they doing? I mean, at what point do you not need income at all to buy $1 million? I mean, that's pretty much the end game here, right? That they just say you don't need to pay us anything, no down payment, no monthly payments, just put your name on the title. I mean, I don't get it.
It really is quite interesting. There was a report that the Reserve Bank published about, I think, 3 years ago, which said that if interest rates drop 100 basis points, home prices would rise by 30% over the following 3 years, all else being equal, right? And in their model, they don't actually include credit or credit repayments. They don't think that's an important part of the housing cycle, right? So, and of course, rates have come down, so that means that people are able to borrow, somewhat more. The responsible lending standards were put in after the global financial crisis. So basically, there's a thing that says lenders need to take account of people's personal situation and make sure that the loan that is being made is not, quote, acceptable. So responsible lending, not suitable, is the sort of thing, right? So that's being removed, and basically what's going to happen now is that the only thing that's going to be important is that the systemic structural risks of the bank should be taken into account, right? So that basically means, well, yeah, pretty much, there's no limits to what you can borrow. And in fact, I'm seeing at the moment in my data, people getting 8 times income ratios on loans now. 8 times. I mean, that was, wacky.
Let's think through that. 8 times. So that means, so what does that mean? If you're making
so if you're in, if your income was 100,000, then 8 times means you can get 800,000 by way of a mortgage, right? So
by way of a mortgage.
And of course, their argument is, well, rates are really, really low, so therefore this isn't a problem because repayments, are somewhat lower on the interest. But of course, you've still got to pay the capital back. And so the thing that I come back to, George, and this is sort of a more general point, I think that the financial system has now basically boiled back households and individuals into effectively a series of cash flows, right? And they expect people to continue to pay cash flows, right through their life. And of course, that means that they can continue to make profits. But, the impost on people over their life through this repayment cycle just gets bigger and bigger, longer and longer. And people are talking about longer loans, and they're talking about, bigger loans. Interestingly, though, property investors aren't coming to the party. So a lot of this is now people buying houses. And what's happening, the other trend, which is also going at exactly the same time, is that people are moving out from the cities. So they're moving into the regional areas. They're moving away from the big centers because of, I guess, the virus and things. And so what we're seeing is a huge skew in terms of demand for houses, and specifically away from the urban centers. It's really a massive,
So
amazing.
Prices going down in the urban centers, like we're seeing in areas here in the U.S.
So what we're seeing is that unit prices, so particularly in the high-rise sector, are down 20 to 25% now in some areas, and they're still throwing more investments at more high-rises. But the homeland packages, which are the things on the urban fringe, you basically find a bit of farmland, convert it into building plots, and then you sell them off, right? The government threw money at those and encouraged people to go buy them. So you could get, for example, in Western Australia, you could get $55,000 from the state and federal government to support a homeland package. There was a huge rise in the number of those being sold over the last quarter. And in fact, in the latest price statistics, the CPI, they actually called out homeland packages as being one of the impacts to price increases, because what happened was that all of the builders put the homeland package prices up by more than the government stimulus, right? So this is a great example of a net sum game. So what you've got in the situation here is you've got this massive buildup now of demand for construction for these homeland packages. And in fact, they can't get the building materials, neither can they get the workers, because it's just too difficult to do. So we've created this amazing mess over there. And then the other thing, just to sort of complete the story, they also allowed people to withdraw from their pensions, the superannuation. So you could withdraw $10,000 last year, financial year, and $10,000 this year, $20,000, right? And my research says that about 22% of first-time buyers who've come into the market use those superannuation balances as part of the deposit to go and basically buy that property. So this whole thing is stoking the property sector, right? And remember what I said, we've got very high debt already and very high property prices, and yet we're still going even higher.
Yeah, but it's so when you're saying that, what I was thinking is like, there's only, I mean, let's say 25 million people in Australia. At what point does everyone own a home? And there's no like, if everyone owns a home, like how can you sell any more homes unless you're moving? But then you're talking about a rotation of population out of the urban areas into, let's just call it, the more rural areas, the more suburban areas. So, but still, doesn't that cause a big problem for the banks? Because all those people that are leaving the urban areas, I mean, they have mortgages. And are they, I guess if they're selling, couldn't they, or aren't they selling at a loss because they're upside down? They don't have any equity? Or are we at the point yet where there's still some equity buffer there?
Now, the equity is still there. For most owner occupiers, it's not a problem, but for the property investors, that's where the real action is, because a few things have happened there. In the investment sector, there was a massive run up of investment properties over the last few years. And the government gave huge stimulus again through tax breaks. A lot of that went to property investors who were building in the high-rise sector. A lot of that was actually foreign buyers as well. And they came in. A lot of the high-rise was also for students and short-term accommodation. And of course, we haven't got any students, international students come back now as well. We've got no international visitors buying. And so effectively in the urban centers, the vacancy rates in high-rise apartments close into the center of towns, and in fact even further out, has gone through the roof. The rents have dropped by 20 to 30% if you can get anybody to rent the properties at all. So that's the thing. The people who are moving are the people who perhaps already had property and are just trading up because basically, they've got equity in their existing property. They can get a bigger loan now, and then they can buy something bigger. More people are working from home, so they want a bigger property. So all of that's in play. So what I think is going on is we're seeing this massive sort of bifurcation between units and houses, right? And between the main urban centers where units are really, on the nose, and out in the sticks. And interestingly, there's been more planning releases recently of more planned high-rise development, right? So they're still sort of wanting to put more of these high-rise things up. The other observation, George, and this is something which I've been looking at quite recently, is in the inner suburban areas, what's happened there in the last few years is a change in the planning rules to allow people to knock down a single house on a block and essentially put up 2 or 3 or 4 townhouses or a low-rise block as well. So we're seeing a massive transformation of our inner suburban areas from relatively leafy green to, again, high concentration areas with a lot of population growth, except there's no population growth now to meet the stuff that's being built. So we've got this massive skew going on. And I just think that nobody's really taking account of, the risks that are involved here, the changes of the character in the places that I'm looking at. And what's interesting is the government 3 or 4 years ago said home prices will never fall under our watch. Well, now they're certainly rising now. The Reserve Bank is saying, well, rates are going to stay low for a long time, so that's not a problem. And the lending standards mean that more people will borrow. So they're just pumping the housing sector to try and actually keep the economy afloat.